of you have fascinating stories to tell. Can you just start by explaining why you are in this area of fintech? And Tilman, I'll start with you on the end there. What has attracted you to trying to serve or offer access to finance to people who are currently underserved?
So let me first say that this notion of bottom of the pyramid is a bit of a misnomer at some level. So in many middle-income countries, it's half of the population. And in poorer countries, it's 80% of the population that's excluded from the formal financial services. And that's a very low bar, the definition. It means to have one account, which is one official account. Mm-hmm. That doesn't mean that people aren't economically active, and it doesn't mean that they aren't financially very active. Actually, they live more financially active lives than all of us because their incomes and their expenses are much more volatile and irregular. So they use the age-old mechanisms, the moneylender, the pawnbroker, the rotating savings club, all these things. So it's people say it's expensive to be poor, and that's very true in this context. And so there's a huge latent demand, and for the first time we have the technologies, the insights and the technologies to actually reach the economically active bulk of the pyramid in emerging markets, I'd say.
Right. Michelle, what attracted you to this? Because you're probably the most recent mover into this area of the three people here.
So Clearbank's about a year old, and what we really saw is that there was 50 million self-employed freelancers that collected some form of 1099 or contractor income. And those people had, first of all, it's a huge segment of the market, and they had fundamental needs that were very different than other employees. So, things like their taxes they needed to save for because they weren't garnished from their paycheck like everyone else. So they don't have to worry about this. They had either no or extremely exorbitant access to credit, and that's largely because it was too expensive prior to underwrite a group that didn't have, the same paycheck coming every week. And then, when we looked at this, if you're a millennial and if you're choosing to be an entrepreneur, or you're choosing to participate in the on-demand workforce, your biggest lever is not how to save more money and having, a banking tool that tells you to spend less on Starbucks. Your biggest lever is actually how to earn more money. And so to show you these other opportunities, especially now in the on-demand space where it's much easier to become an entrepreneur than ever before. And so that's really where we saw the opportunity.
There's only so much you can save by cutting out those lattes every morning.
I know. Well, especially when you have these big cities where the cost of living is pretty fixed at some point.
Right.
And so really looking at how to earn more was a big part of the equation.
Right, and you're primarily focused on freelancers in the US.
Yeah, and so what we did is we started with partnering with the big on-demand platforms to begin with, because a lot of those people were uniform. So 1 million Uber drivers actually look the same. And so we could plug in, we could get their Uber data, and then we could use that as some underwriting.
Yeah, and I want to come back to that in a moment. Billy, Stripe, tell us what got you into this space. And I want to just plug here, because I'm Irish and I love a chance to plug my fellow countrymen. It was founded by two Irish people, no? Yes,
that's
good.
Right. And Stripe perhaps brings a slightly different perspective here, in that I think a lot of, when we talk about the bottom of the pyramid, we take the perspective of really the business side. And really the entrepreneur. And a lot of what we were focused on is really the developer experience, the entrepreneur experience. And what we saw was that the internet actually, despite the founders really understanding that it had a potential for economic disruption and economic progress on a global basis, unfortunately were not able to really implement payments the way they wanted to. Fun fact is, if you actually look at the HTTP specification, there's actually an error code in it that is actually called payment required, right? And so you knew that they thought this was going to be an important part of it, but they actually never got around to implementing it. And at the same time, when we think about Stripe and we start looking at the big market picture here, we realize that maybe less than 5% of consumer transactions are actually happening online. And yet in 2020, we're looking at somewhere around 5 billion people connected to the internet through smartphones, right? And so it's pretty obvious that, whether it's 20, whether it's 30, whether it's 50% of transactions, we're actually going to have an order of magnitude increase in how transactions happen online. And that's what we're really excited about, is that incremental growth and how that's actually going to happen. At Stripe, we talk a lot about how do you increase the GDP of the internet, and that's what we're passionate about. And we think that's going to happen through a lot of software, through a lot of innovative companies like Lyft and Uber and Shopify and Instacart that are actually starting to connect the internet to the real world and really driving a lot of innovation on a global basis. And that's really what we're looking to enable.
Yeah.
And they've really changed the ability to actually start a company as an entrepreneur. My first business 7 years ago was an e-commerce company, and it was 6 weeks for us to set up a payment processor and to check my personal credit and to actually get a developer to integrate that. I mean, now that's a process that takes a day with Stripe, sometimes even faster. And so that really changed the market there.
Yeah. So I want to sort of draw that contrast with what you're just saying there, that sort of order of magnitude and the sort of consumers that you hope to serve in the future. So you're currently across 25 different countries. Because I think a lot of the focus of fintech is, for a lot of people in the room here, is in the US, and it's people who are already quite rich, and they want to help them make them a little bit more wealthy and earn the profit from that. But you guys are approaching, your business model approaches it in a different way, I think for all three of you. You're talking about just so many millions and indeed billions of people that are potential customers or consumers. And so the margins might be quite thin on that, but it's the magnitude of the potential customers. Is that true for all three?
Yeah, I think the key is to think about this in terms of platforms on which a lot can ride. And in our case, 5-6 years ago, we realized that the traditional ways of reaching people just wouldn't work. It's too expensive, too difficult. This is in emerging markets. And the mobile phone started to provide this promise of a platform on which a lot can ride. And so we are an impact investing firm. So we invested behind a number of teams, entrepreneurs that had the same insight and that were starting to think about what can we do when mobile payments becomes ubiquitous. And that could be alternative data underwritten short-term credit, because there's 1 billion people out there who can be reached, generate digital data, but don't have a traditional FICO score. And we invested, and several of the CEOs are here today, so we invested in EFL that uses psychometric testing. Signify uses cell phone data. Lendo uses social data, social media data, online data. So that is very powerful. We have another investee, Juntos. They use AI-powered, initially SMS dialogue to create savings stimulation. Very powerful, works very well. They engage in a dialogue. They do it so well that in the first pilot, at the end of the year, this was in Colombia, some 38% or so of the participants texted back and said, Feliz Navidad, thank you so much for all your help. And there's micro-leasing, micro-insurance, digitally delivered. None of this would have been feasible without the digital platform that the mobile phone first and then mobile payments on that delivered.
Right. So I have a quick question on that. So I want to keep this just quite high level for another couple of minutes before we get into the details. So I spent a couple of years living in East Africa about a decade ago, and it was right at the start of the M-Pesa sort of transformation. And there was a lot of talk about different technology and everybody owning phones and how it can transform lives. And I have to say, looking back on it now, I think it's been disappointing what's happened. Like the expectations were so high, it was difficult to meet those expectations, I think. So the transformation perhaps has not been as big. It's been very big, but has not been as big as a lot of people expected.
Oh, then you haven't been back in a while.
I've been back quite frequently.
M-Pesa in Kenya is used by pretty much everyone.
Yes, absolutely.
Okay, sorry, I let you ask.
So what I want to know is are we now getting closer to an inflection point when really we see access to finance rolling out across a majority of populations, because there's still a lot of people who do not have that sort of access? At what point do we reach that sort of tipping point? Are we there, or is it still another few years away?
So in some geographies we are there. We are at this tipping point. So I was in East Africa was first because of mobile money. So mobile money is pretty ubiquitous now. It started with the more tech-savvy younger folks in Nairobi who wanted to send money to their families in the villages in the rural area. But now it is literally ubiquitous. Everybody uses it, right? To send money, they say M-Pesa the way we say Google today. It's become a verb. And so it's a new technology that is powerful for everyone, including the base or the bulk of the pyramid. And once you have this ubiquity, these other things can ride on it. So we micro-insure, which we have invested in, they reach 40 million people with a small ticket size, small premium insurance coverage on the life and accidental death side and health. digitally underwritten or alternative data underwritten credit in Kenya is now big. As a matter of fact, I start worrying about a digital credit bubble, right? Because there's so many offers out there. And it started with M-Pesa connecting with some of the banks in the country. And because it was to the mobile e-money account, it was an instant connection with a savings account. And then over time, when there was enough transaction data, it provided credit. I think by number of accounts, the regulated banking partner of M-Pesa, CBA, the Commercial Bank of Africa, is now the biggest retail bank in Kenya. I mean, you talk 11 million people or so in a country of whatever, 27.
Yeah. I would say that that's a very pessimistic attitude.
Good, go for it.
And you know, one of the things that gets talked a lot about in technology is just, you know, how we tend to overestimate what's going to happen in 5 years and then underestimate what happens in the next decade after that, right?
Yeah.
And I think the other thing that's happening here is that there is this fallacy that somewhere in the world, someone's going to come up with one infrastructure, with one protocol that's just going to magically solve this and make it ubiquitous, right? And I actually think that's quite hard, right? Like money and payments and commerce is oddly very cultural, right? Mm-hmm. Like languages, people have a lot of cultural preferences, a lot of different approaches, how they want to transact, right? And so I think when things like M-Pesa happen, we should be celebrating and say, bringing all those people to the doorstep of being connected electronically, being able to pay, is a very important milestone. But what we're still all working on and what's still lacking is kind of this underlying veneer, this infrastructure that connects it all, right? But M-Pesa now existing means that it is within our grasp and within, you know, very near grasp. Like we at Stripe look at it and we say, we are just a few conversations, a little bit of technology away from being able to say, someone that's actually an M-Pesa user should be able to transact with a business that's actually in the United States and be able to have commerce happen across borders. We do this today. Like if you look at every business that uses Stripe today can actually accept a payment from someone in China that's an Alipay user, right? And they might not know how one protocol works, how the other network works, but they can actually transact, right? And so in many ways, the way we think about this is, we were talking backstage, is for those of you that follow Skype, they just launched Skype Translator, right? Which was this phenomenal thing where now you can be on Skype and I'll speak in German, someone will speak in Spanish, and it's just happening in real time, right? And so I think when it comes to payments, it should be something similar, right? There should be a framework. We all pay how we want. We all behave the way we want. But the infrastructure and the technology should be there to enable it to happen.
Yeah.
And I think just moving this comment on, you know, are we at an inflection point and bringing that back to the US, I think, you know, when we look at it, when we looked at adjudicating this group of people that it was really, you know, not financially possible to do so before, there's really been a lot of things that's changed, right? When you used to go into bank, you used to have to personally go in, verify your identity, you had to talk to a human, you had to sign physical paperwork, you had to, you know, do this entire process. So today when an Uber driver signs up with us, in 25 seconds, we have all of the data from their Uber account, and we have all of their banking data. In 25 seconds, and we can make an instant adjudication on that. That took out the person, the paperwork, the tracking. And that bulk of cost went away, which is how we got the opportunity. And we only are having that because we do have, you know, platforms like Stripe, we have platforms like Plaid that allow me to see what your previous banking history may have been, that's allowing us to do this at a fraction of the cost and will be that thing that accelerates, you know, this exponential curve that we're going to see.
So the infrastructure is there now.
Yeah.
And is that true beyond Uber? So Uber is a very specific example that gets raised a lot. But so what other sort of industries or sectors is that also true?
So I think it's specifically, I mean, Uber's one platform that's designed for one group of workers. But the real rails is things like, you know, a prepaid card. Now you can build what would be a neobank or a modern day banking infrastructure on you know, prepaid card program like a Marqeta. You can now connect to anyone's bank account and see their data if they choose to share that with you, you know, with a platform like Plaid. And you can use things like Stripe to be able to easily connect and accept payments. Those are the tools that, you know, the new stage of entrepreneurs like me are going to be able to use and are using, that's allowing this to grow so quickly.
Yeah, I would say, you know, we think a lot about Stripe. Like, what we're building is roads. And then what's coming on those roads, it's a big line of things, right? And so, you know, yeah, there's Uber, there's Lyft, there's Instacart, right? Like people always ask us, like, are you working with retailers and supermarkets? And yeah, we're not in there like installing POSs and things like that, but we are working with companies like Instacart that are building a new approach that then says, we're gonna bring the groceries to you, right? You look at companies like Kickstarter, right? That are now like doing crowdfunding, right? So all of a sudden, anywhere in the world, financing is possible. So Indiegogo, Kickstarter, they're all really changing the way that you can actually secure financing for the things you're trying to do. Remittances, right? We launched a new capability a week ago that actually allows you to receive money on your debit card, right? And to have that money happen instantly, right? So all of a sudden it opens up opportunities to how remittances should happen. Like we have all these countries where people are actually like walking to all these weird retail places and companies that actually have to like maintain this retail infrastructure to enable something that is really, you know, it starts electronically, then they're converting it into cash to only then be put back electronically. All these things shouldn't have to happen. And so I think these roads, these pipes that we're building, quite frankly, are going to affect all industries.
Mm-hmm. Tilman, you're going to...
No, I agree with that. And what's intriguing in this context is that some emerging markets are leapfrogging us in that infrastructure. Mm-hmm. So,
anywhere in particular?
Yeah, so I mentioned East Africa with mobile money, and that's in some sense the past story already. The place that we are now really excited about is India. And that is for several reasons. So India, which was in the backwaters of digital finance, or really the front end of the digital retail front end, really has catapulted itself from backwaters to the front end. And they've done it with a combination of sort of public goods investments and industry cooperation, if you will. So as you may know, there is a digital or biometric unique identity system in India. 1 billion people have signed up, 10 fingerprints, 2 iris scans. That's there as a public good. The regulators have agreed that that identification is good enough for KYC purposes, so there is eKYC now. Industry has agreed on an e-signature and a digital locker type set of standards. And then on top of that can now write a public utility, which is the National Payment Corporation of India. It's owned by the banks. And it has an open API type architecture. And it really allows, in the Indian context already now, what you described earlier, essentially any-to-any account transfers as easily sent as an email. It goes from @Tilman to @Michelle. It's both are backed by regulated bank accounts at the end, but all what has to happen happens behind the scenes. I, as a consumer, don't have to worry about all of this. And it does it at a fraction of a cost. It's literally marginal cost. So that is an infrastructure environment, digital infrastructure environment, that really should spur a lot of innovation that can ride on it.
Yeah, and I have to say, we get a lot of, an increasing number of questions and queries from clients and investors about India, and it's not just in fintech, but this is a country of 1 billion people growing at 7 or 8% a year. But it sounds like the regulation and the infrastructure is finally coming together to offer a much more viable proposition to investors and to businesses.
Yeah, I think a lot of the groundwork is being laid out, right? I think that there is, India, as with many other countries that we'll see, there's still a amount of time that's going to have to happen for people to actually participate and you know, creating the identity systems, creating the networks, governments actually investing in, you know, people naturally tend to transact with governments as part of their everyday lives. So government switching to actually using these systems will become a great way to start bringing people online, and then I think that's what's going to build it up. We do think that, you know, India has huge potential. Countries like Peru are undertaking similar tasks. They're early on, they explicitly said, we want to build out a network that is actually going to be aimed at inclusion, at really trying to solve a lot of the poverty issues that we have. And they wanted to build a low-cost network. They've brought in, you know, mobile carriers. They've changed regulations to be more inclusive, so it doesn't just have to be banks to create a more competitive environment. And they've regulated in such ways that it encourages certain kinds of transactions to happen that ultimately will lead to more inclusion.
Right. I want to give people an opportunity to ask any questions that they might have. So if you have any questions, please raise your hand and we'll get a microphone around to you.
Maybe as people think, I give you one thing that bothers me in the US.
Go for it.
Which is where you, as an example of where we are behind, right? and so we have a legacy, obviously, infrastructure, and we have existing regulation and an industry that's in place. And in many respects, for us, it works pretty well. If you are paid bi-weekly with a check and you get paid on Friday, you really have to go and cash that check for a very steep discount, because it would only get settled and you would only get credited on your bank account on Monday. But you need that money to buy groceries over the weekend. We really have inefficiencies in the US still that have to do with the infrastructure.
We've just had a panel.
Sorry, I didn't mean to shut.
No,
I wanted to give you time.
We've just had a panel on regulation, so I don't want to get too much.
Oh, I see.
But
Okay.
I would like to ask each of you. So we have, you may not have heard, but a little election coming up on November 8th. And we don't know who's going to win that yet. But if you had any advice that you would give to the incoming president, whoever she may be, what would your advice be
I think
in terms of regulation?
I think it's, we see this all the time.
Yeah.
We have a product that's entirely based on paying you on a prepaid card, so you don't have this problem on the weekend, right? These are very, very big problems for giant swaths of the population. I think this is still a highly regulated environment, and what startups are good at is they're good at speed and they're good at going quickly. And so one of the things that's been discussed extensively, but it's not here yet, is a regulation sandbox where you don't have to comply at the same level the Bank of America does in your first 2 years of a startup. And the UK has been pretty good at doing that, and I think that's a really important piece to look at here. And I think, so that would be, my one thing. And then the second is, already the UK is starting to look at either a passport system where you could have a company that's based there and gets a passport to operate in Australia or another country. And that, those are the types of things that starts breaking down these borders, so we can have good ideas expand quickly.
Yeah.
I think for us, I think going back to some of the examples, I think really thinking through how the government can act as a catalyst to encourage more collaboration on things like authentication, I think, and to make those more electronic authentication more ubiquitous is something that I think will be important. And then I think the other thing that is going to happen, and it's the internet should be borderless, right? And we launched a product called Atlas earlier this year, and the whole intent was to make it possible for entrepreneurs anywhere in the world to be able to incorporate in the US, to be able to have access to a bank account in the US, and get access to Stripe so that they could participate in the global economy. And so I think we need to be thinking about those services for the US to become a place, because as the internet becomes more borderless, it will create more competition, and people will have more access to those kinds of services. And so I think it's important for the US to lead through that mindset.
Yeah.
Yeah, so I mean, the terms of regulators is separate from the presidential election, but obviously the White House does have some influence. I think I would generalize Michelle's point. So this notion of regulatory sandboxes is interesting, but in general, I would say we really need a dialogue between innovators, incumbents, the regulators, and there are 5 federal ones and lots of state regulators, that sort of says, okay, how can we meet the regulatory intent, which I think is very legitimate?
Yeah.
How can we meet this far better at far lower cost to providers and consumers? And I think my favorite example, even though I know it's very difficult to tackle, would be the entire KYC regime, anti-money laundering, combating terrorism finance. This was designed at some point, maybe in the 70s, 80s, predates me, and has been tweaked and tightened and after September 11. But it was conceived before there was an iPhone and big data and AI, or at least today's...
And other ways to identify you.
Yeah, and I got to believe that there are better ways to achieve that objective at a far lower cost. Why can't we get that type of dialogue going? That's a bit frustrating, I think.
Yeah. So talking of things that were designed in the 70s then, FICO scores. Michelle, you said there's a lot of bluster around big data and using data in different ways. You seem to be doing that in a very tangible way. Can you talk us through that a little bit about how you're approaching that?
Yeah, so when we started, we wanted to do really very simple credit. Sometimes it's like $100. Almost all of our products are below $1,000 for these freelancers. And our notion, because when you looked at the credit scores, they were all very low. And so we said, okay, well, we're just not going to look at credit scores at all, and we're going to start looking at your employment, which is, we started with Uber drivers. And so our credit score was fundamentally composed of your star rating, how volatile you are. So people that get up in the morning and do the same things every day are very reliable, and they're actually very reliable at paying back money. And then we would start you off with, small amounts of credit and extend from there. And, I just have this graph that now shows what your FICO score would be and what we call it a clear score would be. And they're not correlated. And so, by using these alternative pieces of data, I think we're, at least for our segment, we're starting to build a better credit score. And then because our products are so short term, we have machine learning that learns every week. These people didn't pay us back. What was in common with them? Let's throw that back into the model. And can iterate in a way. And I don't know the real answer why we haven't done more iteration on the credit scoring model. But I think that we now have a lot of these pieces of data to start doing that.
Yeah.
I think on the business side, it's fascinating to see some of the disruption that's happening that people sometimes are not even aware is already happening, right? And so, the idea of a credit score for a business is in certain instances almost obsolete. When you look in the startup world, and when you think about what a Kickstarter or an Indiegogo is actually doing, right? What they're saying is, you know what? I'm not even going to come to you for credit. What I'm going to do is I'm going to present an idea to the market in general. And the market is the one that's actually giving a signal through their purchase dollars, through their things, what they actually think is going to be a good product. And so now these businesses are coming back and saying, here's how much demand I have. Here's how much I'm going to go execute. Now, just help me fulfill that. And so it's really upending the model on the process of when you gather data, how you assess that risk. And I think those are some of the things that technology is doing.
Yeah, so one common refrain, I think, from talking to several people in this room today is that the real proof will be during the next downturn, that will sort of sort out the good fintechs from the bad fintechs. And I think to put that in some sort of perspective, it's been 7 years now since the last recession in the US. Typically a business cycle lasts 5 years, so chances are the next recession is closer than the last one. So these sort of iterations and new ways of looking at data and sort of trying to figure out if a customer is going to be a good customer, will that all be upended in the next recession, or do you think that you think that these are solid, good?
Not in emerging markets. I mean, in the informal economy in emerging markets that we are trying to reach, they're actually quite insulated from the global financial sort of swings, right? Sort of retail deposits are much stickier. The local informal economy is much more stable at some level. So this is really systems deepening, reaching far more people. And I think it will be pretty insulated. Yeah. The power is the power of the new channel, the data-driven underwriting outreach is very, very strong.
I think that it's important to see the things that they're enabling to try to make that assessment, right? And I think that the big difference, as someone that was out in California in 98 and 2000, is that I think you're seeing now a lot of companies that are taking advantage of these fintech capabilities, but they're building things that are not necessarily technology, right? Like Uber is changing transportation, right? And so these things are pretty fundamental changes in how all these other industries are working that ultimately were dependent on innovation that's happening at the fintech layer. And so I think that innovation is now here to stay, and it's more about how else is it going to be used, right? And it's pretty fundamental changes.
Yeah. And I guess the flip side to that is when you have an industry that's been so transformed like that, is you don't have past experience to look back on and prepare you for what is to come. So Michelle, in the gig economy, what's your expectation over the next few years if you go through a downturn? A lot of your
I think that in a downturn, a lot more people go into the gig economy, right? I mean, where a lot of these people have come from is, they've lost a full-time job, they're changing, they don't like the work they're doing, and so they want to do something where they feel like they control more of their own time, and that's, millennials have driven that as a part of that demographics personality. Corporations have driven that because it's a much more efficient in many, many ways to employ, a sea of contractors that can respond on an Uber app versus the old model. So I think that fundamental shift is here to stay. I don't think I would ever say I was impervious to any downturn. I think what I do know is that when you offer lower cost solutions into the market, people tend to come and they tend to be very sticky. And so you look at, the robo-advisor models, right? There was really no reason. Well, there was a reason we were charging 2% to manage people's money. But now that there are $3 billion firms that can manage your money for 0.05 or 0.25 of a percentage point, I think it will be hard for people to go back. And those are the businesses that will be big enough that will withstand our next downturn.
Yeah, we've got a minute left. I want all of you to sort of look into your crystal ball and look ahead 5 years or so from now, and bearing in mind that we overestimate what we can do in the short term and underestimate the long term.
Yeah.
If we're sitting back on this stage 5 years from now, what are we going to be talking about then that we haven't really discussed today? What's going to be the main crux of increasing access to credit around the world?
And I'm going to cheat and also answer that question because
Yes, go for it. Yes. I couldn't understand it, to be honest, which is why I ignored it.
And the question is who has debit cards and is receiving remittances? And I think the inherent thing here is that we have this visualization of debit cards as this plastic thing, right? And I think if 5 years from now we're in this world where everyone has a smartphone, right? And the question is, what does that look like at that point, right? Is it plastic? Is it not? And I think that, you look at it today, if you're a carrier, you're starting to push money towards mobile phones, and then that gets topped off in minutes and things like that. Where inherently, I think 5 years from now, we may be looking at a completely different way in which people receive value, in which they actually then use it as a payment instrument. Like you could have virtual cards. We're racing companies that are actually doing that. Mm-hmm. And as you open up those endpoints, right, then all kinds of things will be able to flow through, and I think transactions and the way that value gets sent to consumers will change.
Yeah. I mean, my bet's on the future of work. I think that fundamentally we're changing the way that people want to work, and the ability to have people work in a totally different way that's not, an economy of full-time labor. And so there's going to be very big changes that governments aren't ready for. There's going to be very big changes to, the financial system. And I think that's going to be a big shift.
I think we probably will have a few smart nations, and I already mentioned India, but it might be smaller countries like Rwanda, Peru. Myanmar is leapfrogging big time, straight into 3G, 4G. Smart nations where smart policy, regulation, the right combination of public good investment, public utility, architecture, and then private sector competition riding on top of that, where all this combines to far superior value propositions for consumers. And they will say to us, man, you guys still writing checks in your ATMs. That's really pretty backward.
That you can't cash on a Saturday.
That does astonish me. I mean, again, going back a decade ago in East Africa when I was transferring money on a phone, and to move to the US 6 years ago and still be writing checks for everything, I find astonishing.
Can I
please,
just one last
yes, go
because
for it.
I do think in 5 years, I do think we're within the realm where a lot of these payment instruments and networks will be much more connected. Mm-hmm. And so then I think we'll be talking about the second order effect, which is, okay, if transactions can happen across more borders, where's the pressure point now, right? And I think when you think about things like fulfillment, like custom, like shipping across borders, all those things, who's going to innovate, who's going to actually start solving those problems are going to be things that I think we're going to be talking a lot more now, because the opportunities to transact will seem more real.
Super. Well, I've been a little bit skeptical deliberately, but you've all offered sort of very transformative visions of the future there, and you guys know a lot more about this than I do, so I'm willing to buy that.